How's it going, guys? Lee here. Now, if there's anything that Aussies love more than having a good time at the beach with their family and shifting a public holiday to either a Friday or a Monday so they can have their long weekends, it's cash flow. Or as many other people call it, passive income. Now, whether you receive that through rent, through your investment properties, or you receive that in dividends, which is what I like to prefer anyways, through the form of shares, it's something that a lot of Aussies do strive for and want to achieve before retirement or even during retirement so that they don't have to rely on a pension payment. So in this video, I'm going to go over 3 stocks in the ASX that can help build that cash flow that we're all looking for going into retirement, or just to help bolster and relieve some of the work that we're currently doing, or to better our lifestyle. Now, before I do so, I want to provide a little bit of context about the Australian economy, just to make sure that everybody's on the same page when we're talking about dividends, because it can be a hot topic in that a lot of people like talking about it, but it could also be a very hot topic in that a lot of people see it as a negative, and you'll see what I mean very soon. Now, when we're talking about dividend investing, the opposite to that is obviously growth investing. Now, there is a balance in the middle, but generally when that conversation comes up, I have a lot of people going, well, share prices haven't really moved for some of these companies that you're suggesting or looking at. However, if we look at Australia, the population is about 26 million people or so, which is, well, very small in comparison to the rest of the developed economies around the world. So unlike your FANG stocks that are domiciled in the US, which is the largest economy in the world, and have the scalability of going, well, everywhere around the world just because they're online and their services and their networks are just so much bigger, those companies, instead of paying out dividends, will hold on to those dividends and reinvest in themselves for growth. And a very good example of that is Amazon. They did not pay out and still do not pay out a dividend, and they grew and grew and grew over time under the guidance of Jeff Bezos. Whereas in Australia, the scalability is very low. And so instead of reinvesting within themselves to scale any further, we essentially get paid out in dividends, we being the shareholder by the way, get paid out in dividends, and that is believed to be the best use of profits for these companies and is an incentive for many Australians to invest and buy shares in some of our big companies. And so although I might get comments about growth, Lee, the price really hasn't moved anywhere, I want to make clear that the companies that I am going to recommend are relatively safe. They are blue chip companies that are very mature and therefore have less room for growth in the Australian economy. But obviously the benefit is that they provide a solid stream of income just because they've got a large portion of the Australian population using their products or services already. Now, having said all that, this list has been compiled with the recent Roni Rona in mind. Obviously, I want to make sure that all the companies that are in this list here, of which there are only 3, are safe and going to be okay, even if we go into another set of lockdowns or if things escalate and get a lot worse. Just to make sure that our cash flow stream is going to be rather safe. So the first pick is Woolworths. Who would have thought? So I'm thinking Woolworths, Coles, or even Wesfarmers, right? These companies have profited throughout the pandemic, and one of the very few to have done so quite well. Now, if you don't know who or what a Woolworths is, I assume that you're an international viewer, but they are essentially Australia's largest supermarket chain. Now, I really don't want to delve into how they make money because there are a variety of ways in which they make money in Australia and New Zealand. Now, obviously, its main model is its grocery stores. They're supermarkets, they're grocery stores all around Australia and even in New Zealand, which have a margin of about 4 to 5%. So what does that mean? Essentially, the candy bar that you buy for $1, they make 4 to 5 cents off that $1. And you might think, well, that's quite small of a number. But again, I need to remind you that they are the biggest supplier in Australia. So that volume, the logistics, everything works out for them. And if another company or another supermarket chain was to come through and try to compete with them, it would be very difficult. Just have a look at Aldi, for example. They've been doing well, but have come nowhere close to trying to take out Woolworths. Now, what we've seen after this whole pandemic situation is that a lot of people have gone to purchase things online, right? You've got furniture, you've got clothes. There are so many things that people are purchasing online. However, I think groceries and, the necessities is one of the things that a lot of people are still willing to buy in person, right? Let's say you buy some eggs or some broccoli or whatever vegetables you want to purchase. the quality of that you won't know unless you see it in person. So I think the business model is going to go strong and they are going to do quite well going into the Roni situation. If we have another set of lockdowns, generally if there's another lockdown, then like people get pretty antsy and try to hoard things anyways. So it's actually quite good for the business. So let's quickly have a look at their dividend payouts and how long have they been paying dividends for. Okay, so we can see here, I'm just down on my iPad, guys. We can see here that they've been paying dividends. Well, they paid in 2020, which is great to see. 2019, 18, 17, 16. We keep scrolling and scrolling and scrolling. They've been paying dividends since the year I was born, 1993, when they paid their first dividend of 6 cents. That's astonishing. That's a very, very, very long time that they've been paying dividends. How long is that? 22, 27 years that they've been paying dividends for. So Woolworths, yeah, definitely a solid one for all the reasons that I've just mentioned before. Now, CBA is second on the list. And let's be honest, if somebody had said to me, Lee, what's the one stock that if you were to buy and to hold on forever in the ASX and not sell it at all, which stock would it be? It would absolutely be Australia's largest company by market cap and Australia's largest bank, Commonwealth Bank. The biggest bank in Australia, which was owned by the Australian government before, it was made private and is now also making a killing. Not only do they have the largest amount of home loans, but they also operate Australia's largest brokerage in CommSec, which also makes a killing in terms of profits. So to keep it concise, essentially they make a lot of money to hold your money, to provide you credit, or to help you make more money. Now I know, hold up. Look, some of you out there might be thinking, hold on a minute. Interest rates are going down. Doesn't that mean that the profit margin is going to be impacted during this whole situation, especially if we go down any further? Well, at the moment, it doesn't really seem to be the case. Well, not drastically anyways, like we probably might think. If you had a look at CBA's recent report, they've profited quite well and still paid out a strong stream of dividends, but only at 50% as per APRA's guidelines. Now, it's also important to make very clear that it's one thing for the interest rates to drop. Thank you, RBA, for making that happen. My home loan is a lot cheaper because of that. But it's another thing for the banks to actually pass that savings onto the end consumer, which is you. Now, if you check any of the big four banks, not many of them have passed that on entirely. I mean, most of them, with their variable rates, are around 2.9 or 2.8% or so. And if you get it fixed, then you get it around 2.2, 2.3 or so. And so just like we had a look at Woolworths dividend payouts, let's check out Commonwealth Bank and how long they've been paying out dividends and to see that it's been growing over time. Right, we're going to go backwards and work back in time. So we've got 2020, obviously, at the top of the list, 2019, 18, 17, 16, it keeps going, 2019, 2008, financial crisis, still paid out a dividend, although it was much less. 6, 7, blah, 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 we're going way back now, 1990s, and it goes all the way back to 1991 at 20 cents a share in terms of dividends, which we can see if we scroll back up has increased over time, gone way past, to $2 and $2.30. This is pre-Roni Rona. Obviously, they've got 98 cents there at the whole Rona situation just because, APRA. So really no surprise there, guys. With that pick, Australia's biggest company, Australia's biggest bank, I'm going with CBA. Lock it in for me. Probably, I would actually put it at number 1, a bit higher than Woolworths. But anyways, it's at number 2 here, and a stock I would definitely be holding for the rest of my life as a dividend income. Now, the last one was a little bit difficult. I had a few different options that I could go towards, right? I was thinking in my head, maybe Telstra, a few other companies, but I had Telstra on the top of my head. But then they've been, not doing so well with the whole NBN situation. And so I really questioned whether they would be able to pay those dividends, which probably is not going to be the case. Anyways, so my third pick, I went with AGL. Now, again, I could have gone with a BHP or Rio Tinto who also pay dividends out and whose business models are actually very interesting when you actually look at the margins that they are working with. But I'll make that a whole new video and also something that I could probably put on the website, which I'm still yet to publish. But I'll keep you guys in the loop about it. So with AGL in mind, I'm thinking of essential services. Obviously, something that we need, gas, electricity. Definitely, I need that, or else the lights, the camera, the computer I'm using, none of this stuff would be working without it. I personally use AGL as well. They've been great so far. They only need 1 day of notice if you are moving. Now, the AGL pick is interesting because their share prices have been going down, like a lot down. But being such a mature Australian company and being around since 1837, according to their site, being around since 1837, it's a mature company with operations and logistics that I think are unmatched by a lot of other companies and providers out there. Not just in their own space, but in comparison to a lot of other mature Australian companies as well. Now again, just like the other companies, I want to look at the dividend stream income that AGL has provided over time. And so 2019, boom, we've got 18, 17, 2016. I'm not going to expand all these. Now, they have not paid dividends as long as your Woolworths and your CBA. So again, this one's a bit iffy. And also, guidance has gone down for the next financial year also, which is why their share price has been dragged down drastically. But in saying that, they are looking forward and they are selling Tesla batteries with the whole solar power systems. Like, you got to store it within a battery. They've been doing that. They've been looking at renewable energy and have consistently paid about a 75% payout for their dividends. So it's been a solid stream of income for a lot of shareholders out there. But anyways, guys, that's been my suggestion. I've been very hot and sweaty in this room. If I turn on the fans or the AC that I'm about to get, it would make a lot of noise. I'm sweating, which is why I'm in a singlet also. That's my pick. That's my list. Tell me what are some other companies you would consider and that I might even look at in the comment section down there below, just to also let me know that you've made it to this part of the video. Apart from that, guys, I hope you guys are all doing well. Catch you guys later. Have a great rest of the week. Cheers.